morning, everybody. Good morning. Thank you very much for joining us. Most of you arrived from very far away this morning directly. Thank you again. So this morning I have the pleasure to welcome on stage Christine Lagarde, General Manager of the International Monetary Fund. Thank you very much, Madame Lagarde. Carlos Torres Vila, Group Executive Chairman of BBVA. Kathryn, Petralia, President and Co-founder of Kabbage. Stefan, Ingves, Governor of the Swedish Bank, Central Bank. I'm really honored that you are here this morning. It's a year of preparation for all of us, and it's really, I'm very grateful that you are all there this morning. The world is changing a lot, thanks to digital for more than 20 years now. The finance world is clearly deeply impacted by digital in general and by fintech specifically. New products, new customer journeys, for the least. But much more is at stake. Cashless society, financial inclusions, new ways of fueling the economy, incumbent disruption, and why not, central bank roles disrupted also. So we have many technology, blockchain, AI, lending, e-money, challenger banks, crypto assets, so many concepts, sometimes just words on Twitter. Far from this Twitter buzz, all serious players that you are and represent today are working a lot on the subject on a day-to-day basis. And of course, fintechs are deeply involved in the change of the financial world. With those changes comes new opportunities, but also new risk and new challenges. Let's take time together, 1 hour, to discuss all of that. So first of all, I will ask, even if it could seem a bit obvious with people like you, to take 1 minute to present yourself and your organization. Let's begin by you, Madame Lagarde.
Okay. And I should take my little microphone because
it's better.
It's better. So good morning to all of you. Bonjour. Ça me fait très plaisir d'être ici et je vais passer le reste du temps à parler anglais parce que c'est plus juste par rapport aux autres panélistes. Donc, Christine Lagarde, Managing Director du International Monetary Fund. The International Monetary Fund, in a nutshell, is tasked and has been tasked for 70 years with looking after financial stability around the world and helping its 189 members, all of them countries, to encourage and support growth, prosperity, through notably trade. And clearly, as a result of that, we are extremely interested, concerned, curious about any development that could have an impact on financial stability around the world, which is why we are very open to understanding, supporting, challenging some of the developments that we are seeing on the financial technology scene, otherwise called as fintech.
Thank you. Kathryn.
Hi, thank you so much for having me today. Our Kabbage's data and technology platform enables real-time lending to small businesses. Through direct access to data that they use to run their business, our customers can come to our site and within 10 minutes have access to capital, which is a process that normally takes weeks at a traditional institution. We've deployed more than $6 billion to 160,000 small businesses in the US, and we've partnered with a couple of very large banks in Europe to deliver that same experience to their customers as well.
Carlos.
Good morning. Good morning, everyone. Thank you, Laurent, for having me on stage and also for organizing the forum. I'm the executive chairman of BBVA. BBVA is a global financial institution founded 1857. We have more than 75 million clients across the globe with big presence, of course, in Spain, where we are headquartered, but also in Mexico, where we are the largest bank, as well as in Turkey. In the southern US, we are quite big in Texas in particular. And in most of the, we have leading franchises in many of the countries in South America. I think what defines BBVA is that we have been at the forefront of digital transformation for quite some many years, and we continue to be. We have been recognized so many times. I think one of the distinctions that we are most proud of is that we continue to be top of the ranking of the mobile banking apps across the world, with our banking app in Spain taking the first place in the Forrester ranking by the technology consultant in 2017 as well as in 2018. We have crossed the tipping point at BBVA globally that more than 50% of our clients are digital already. This was crossed in November of 18. 40% of our sales are digital, as measured in units, and 30% measured in value. So clearly, we are embracing technology to deliver better experience, transforming our business in so doing.
Thank you. Stefan?
I'm governor of the Swedish Central Bank. On the one hand, we've been around for 350 years, so we've seen many technologies in the past. And in that sense, there's nothing new under the sun. On the other hand, we're rapidly approaching a state of the world where basically people are moving out of cash. I'm also chairman of the Basel Committee of Bank Supervision, and I'm sort of personify what is called Basel III. Those 1,500 pages with new rules that have been produced in the past 10 years. Whether it's good or bad, time will tell, but it's a lot of new rules. And before I took up the present job, I used to belong to the men in black working for the IMF. Flying in.
It's a family meeting.
Yeah.
Thank you for this short introduction. So we'll try to have this panel in 4 parts. First one, the potential impact of technological innovation on the financial sector. Second part will be opportunities and challenge for the payment and other sector. The third part will be risk and regulatory response to the development of fintech. And just as conclusive word, we'll finish on how all those nice players should work together to face all these new challenges and risk. Of course, all that if we have the time to do it. So let's go directly to the first question for you, Madame Lagarde. In what areas of the financial system does the International Monetary Fund see the greatest potential for positive change as a result of technological innovation?
I will surprise you. I would say the fight against violence to women. I know it's not the usual talk in fintech.
That doesn't surprise me from you. You are right.
But I'll tell you just a quick anecdote very quickly. About 5 years ago, as we were working on a program with Peru, I visited Lima, the authorities, and all the rest of it, and then we went to the high plain and visited with rural communities. And I was just fascinated to meet this woman, Maximiliana, whose photo is still on my desk today. And she was one of those Peruvian women. She was in her late 50s. She had lost husband and all her children, most of them sons, but the daughter died as well, because of the terrorism in the valley where she was. And she managed to actually pull herself together and start a little business of growing little guinea pigs and selling guinea pigs, and then growing a little farm around with a little vegetable here and there. And she was able to do that through something that she showed me that she took out of her pocket, that she held close to her waist. And she took it out, and it was a payment card. And she took out her mobile phone, and she explained to me, she said, thanks to that, I can actually transact, I can sell my products, and I am not under the absolute scare that people, in the main terrorist man, would actually steal my money and be violent against me. And to that device, I owe my life and I owe my well-being. So from that moment on, after having met Maximiliana and spent the whole morning with her, I went with her to the marketplace and all the rest of it, I figured that those mobile payments, of which you are the champion, can actually be not only fantastic in order to reduce cost, in order to save time, in order to disrupt existing businesses, and I'm sure we'll be talking about that at length, but can also be transformative for the life of people. And I hope in the process of those questions, we'll be able to talk about remittances from foreign workers who are based in multiple countries around the world, and whose remittances back home can actually be significantly expedited, the cost of which massively reduced because of digital transmissions, payments, and disruption of the way in which business has been conducted. That's my story.
And that's a very important one. You do know that we also try to fight a lot in this industry for women diversity, gender diversity. And for the first year, we asked the question, when you register, are you a man or a woman? To be honest, until last year, we never asked it on the form. I was not able to tell you how many people were there being a man or a woman, because I didn't realize perhaps it was really a real problem. You are 23% women in that assembly today, which is not enough, of course. You should do better, please. We'll discuss of that another time, I'm sure, in the panel. What is also, Madame Lagarde, the IMF doing to help countries respond to technological change in the financial sector?
Okay, I'm going to tell you the story of the Bali FinTech agenda. Every 3 years, the IMF has to hold its annual meetings away from base in Washington. So last October, as Stefan would remember because he was there, we all met in Indonesia, and Indonesia had promoted Bali as the site to go to. So 1 year early, we started working on the agenda, and we thought FinTech actually warrants that regulators, supervisors, finance ministers, central bankers actually pay significant attention to FinTech, its development, its opportunities, its risks, how it contributes to the profitable disruptions that I was referring to, but how it can also induce risks. So we discussed that with some of the key finance ministers of the planet. And you know, at the time, there was real cultural differences between those who were keen to regulate and interfere, those who just wanted laissez-faire and nothing else, and those who wanted control. Try to take a guess who I'm referring to. I'm sure some of you understand. It took about 6 months to work it out and to agree that we would not be using framework, because framework in respect to FinTech can be too prescriptive, would not be unifying, would not be helping that cooperative spirit that you will be referring to at the end of our session. But so we used the agenda. And we came up through working together, including with the central bank governors, through a list of 12 principles which we thought would be helpful for policymakers, for ministers of finance, for central bank governors, to actually look at if and when fintechs actually start disrupting, start emerging, start raising a lot of money, lending a lot of money, whenever they act as either intermediaries or quasi-bank or bank, and what kind of licensing and multiple issues. But we came up with that list of 12 principles that now policymakers are using and referring to as the Bali FinTech agenda. So when a small country is facing the disruption, they can refer to the Bali FinTech agenda, go through the checklist and see, okay, am I doing this? Do I have this regulatory aspect taken care of? Am I doing my anti-money laundering checking? Am I combating the financing of terrorism? Is that institution actually operating as a bank, taking deposit or not, lending or not? So that's one of the things that we're doing. Let me just mention another one. Annually, we do the audit of all our member countries. Now, when we do a financial sector assessment, which we do on a regular basis, well, we look very carefully at what framework, what environment applies to that country, and whether or not there are breaks, encouragement, with what security measures around it in order to encourage digital financing, digital banking, digital devices that will be helpful to financial stability and inclusive growth. That's what we do.
So we see that it is at the heart of your agenda. So, Stefan, we just mentioned regulators and so on. So how can central banks and regulators anticipate and respond to these potential disruptions?
Well, first of all, I mean, when it comes to change and new technologies, that's not new, because technologies come and go, and most central banks have been around for a long, long time. So this is something that happens once in a while, and then you deal with it. And what is important is to be mindful of when we talk about technologies, that technology is also always connected to, in one way or the other, to a social framework. And that is particularly the case when we're talking about money, because money is essentially about what people have in their heads, because money is a social convention, which is not really dealing with technology at all. So the issue is how to combine technologies, using the plural, with what people have in their heads. And that's what it is all about when it comes to the central banking aspect of it, and how to do this. And these very fundamental basic issues, they're a couple of thousand years old. So in that sense, we can be all worked up about new technologies today, But essentially, when you talk about money, there's nothing new under the sun.
In what areas do central banks see the most urgent needs for monitoring and or potential actions?
Well, when it comes to what we do is that part of our job, and this holds for almost all central banks in all countries, is that the basic role has not changed. Our job is to make sure that there is a stable monetary and financial system. And what we mean when we talk about stability can change over time depending on the technology that you are using. But still that fundamental role does not go away. So for us, it's really about how to understand what is happening. Part of it is about what one could call regulatory gaps. What do the regulatory frameworks look like given these new technologies? The other one, which is very, very obvious, is that there is a crowding out of physical cash. So eventually, at the end of the day, if this happens without any measures at all on the side of the central banks, basically it becomes impossible for the general public to hold a direct claim on the central banks. You can only hold a claim on privately owned banks. And that means that, again, the whole issue of safety soundness always comes back in one way or the other. You can do that in a very active role or in a less active role. And when it comes to the operational aspects of this, it's, for example, thinking hard about whether to or not to introduce a central bank digital currency.
We'll come back to that a bit.
Yeah, to think about payment systems. Because what most people don't realize when we are talking about payments is that each and every payment eventually passes the computers of the central bank in one form or the other. Or you can also think about it being a kind of a facilitator, like the Bank of England, the Monetary Authority of Singapore, basically allowing new technological experiments sort of to take place and to see whether you can make them work well within the regulatory framework.
So your role didn't change a lot in the last 1,000 years, but may the central banks themselves be disrupted in some of their mission with all the new players we see around? At least many say they could, but what is your point of view?
Yeah, well, in the sense that it forces you to think outside your traditional toolbox. Because most people and most central bankers take the structure of the financial sector for granted. And that holds particularly if you deal with macroeconomics and when you talk about monetary policy. Most people dealing with monetary policy have no idea what the plumbing actually looks like under the hood. And this is about the plumbing. And there's a difference between monetary policy and monetary theory. And this is about monetary theory and how you actually design the system. And that puts all sorts of new requirements on us who are working in the central banking community because it forces us to think hard about the plumbing, what happens when the plumbing changes, and whether those changes are good for society or not, because that's our role to think about those things.
Thank you very much, Stefan. So, Carlos, in your point of view, what opportunities does technological innovation create for banks, big banks like you are, to stay competitive and strengthen their positions in the financial sector?
I think it creates huge opportunities. I agree with the governor that money matters are not new. They're quite old, and that it is a convention. But it is true that technologies help old problems in big ways. I think we can and we are embracing technology to bring about more convenient solutions. That includes the aspect that Madame Lagarde was talking about, the inclusion side. We are quite active ourselves in South America. We have BBVA's Microfinance Foundation doing a lot of what you were describing in Colombia, in Peru, in the Dominican Republic, really bringing productive credit to mostly women in the verge of poverty, bringing them out of poverty through that productive credit through technology. So that's one good example how technology can be used to bring about more convenient solutions to old problems, making things cheaper, faster, simpler. Second aspect is that technology helps us, the banks, be more efficient in many ways, in being better at preventing crime, suspicious activity, being better at underwriting credit or better at doing recoveries, and many of our internal processes. But I think the big bang will be and is being solving a problem which is also very old around money, which is financial decision making. I think that's really where technology will have a huge impact. We believe we're in an age of opportunity, bringing the age of opportunity that we're in to everyone. That's really the purpose of BBVA, and for us that means helping people in their financial life, not in the money infrastructure side of things, but in the decision making. I think that's where the big change is happening.
BBVA was one of the first, a few years back, 6, 7 years, perhaps 8 even, to work with fintechs, buy some and so on. We'll discuss that at the end of the panel. But in the past few years, from the perspective of a large bank that you are, what did those disrupting actors bring to BBVA? I mean, you have been the witness of all these past few years.
Yes.
What did it bring to you?
We have invested in a lot of fintechs. We've bought some. We have a very active venture capital fund, $250 million Propel Venture Partners. We have also invested through Innovation Ventures, Kai-Fu Lee's fund in China, another $50 million. And we have bought companies like Simple, like Hovi, like OpenPay, and others. We are investors in Atom. What that has brought to BBVA is a lot of learning. It really has accelerated the pace of change at the bank. It has kept us sharp, looking at how things are done outside. It has helped us improve our internal processes as we connect in being an open bank, connecting with some of the companies. We haven't done so with Kabbage, Kathryn, but maybe in the future we will be doing things together. But we have certainly opened up the bank a lot, and that has helped us improve our processes because really the new players demand different things. So I would summarize it that the most impact this has had is on accelerating the pace of change, which is no minor feat, because when the pace of change outside exceeds the pace of change inside, the end is near. That's why accelerating the pace of change ought to be an important strategic driver.
That brings me to another question. Even with great cooperation capabilities, and that's also your job to open all those cooperation possibilities to the fintechs, do you think some giant incumbents in the financial sector like you are could one day be so disrupted because of the different pace of transformation that you just mentioned, that you could face in the near future what Kodak did, everybody called the Kodak effect, or so many other companies who were at the top and saying no one can disrupt them, and finally they disappeared?
Well, I think like any sector that's being transformed, there'll be winners and losers. I absolutely believe that there will be banks that are going to be winners out of this transformation, banks that understand and embrace change and really have that mindset of innovation and incorporating that innovation into their offering. As I was saying, the big job to be done is solving people's decision-making around money, and businesses as well. There's a lot of bad decision-making around money out there, which creates a lot of frustration in people's lives, a lot of unhappiness in people's lives, and I think banks that contribute to solving that problem, which has a lot to do with data. I think we will probably be talking later about data. But banks that solve that problem, really helping people in their lives, in their decision-making around money, will reduce the stress associated with money matters and therefore have a value proposition that, yes, it will be in a different landscape. Industry lines are blurring, so it will be most likely incorporated into wider ecosystems. But in those wider ecosystems, banks have a role. On the regulated part, there will always be parts that are regulated around deposit taking and so on. But beyond that, in the wider play of bringing value-added solutions, different value propositions around financial decision-making, I think we have important elements going for us.
Just in few words, because I'm not sure we will have time to come back to that very important point on data. Do you think today the data challenge is a key one for big banks like you?
I think data challenge is a key for any player in any industry today. In the age we're in the age of technology, really data is where the value lies. It's all about deriving insights from data, making sense from data to bring value to consumers and to businesses. So when we talk about AI, really the driver is not so much the technology or the algorithm, but it's the data that you feed. And now data has peculiar characteristics. Laura, it might take 1 minute, but I think it is very important.
You will lose it at the end.
Yeah, but because data Data has this characteristic that it can be used by any number of firms without being depleted. So any number of firms can actually extract the value from a data set, and the data is still there. So there is social value in data being shared across firms. This is very important, and it's not always realized. But I think regulation and going beyond the Bali FinTech agenda, maybe taking it, Madame Lagarde, one step further, I think we ought to recognize the ownership of data as a fundamental human right. And that has the implication of privacy. I think in Europe we have that quite clear with GDPR and the rules around using the data with consent, which has some practical difficulties and complexities that we could also talk about, where banks can actually help in those complexities. But it has another side which is a lot less talked about, which is the data sharing. So if data belongs to the person or the business to which the data relates, that data should freely flow and not be hoarded by the companies that have gathered it. This is very important in this age of extractive networks that have this increasing economy of scale and this virtuous circle of gathering data, making sense of it and gathering more data. We should have regulation that actually forces that data to flow. We have that in Europe in a subset of the data that banks gather, that's PSD2, but how about extending that to all of our data sets? And how about doing that cross-sector? So all sectors have to share their data through consent, but the same way that the banks have to do. We're all for that, and I think, Governor, you might have a role in driving cross-sectorial, cross-country, cross-geography regulation, or at least frameworks, that, or at least agendas like the Bali FinTech agenda that beyond FinTech, really in technology, drive for the free flow of data across all sectors.
Thank you very much. I will ask Stefan and Madame Lagarde to react to this one just after in the next question round, because I need to move on and go to Kathryn. So Kathryn, data is a good introduction for you because Kabbage success is based on data usage at the beginning. Could you tell us how did technology change the lending business in the past 10 years?
I think the democratization of access to data is what's democratizing access to other financial services. The rising tide lifts all the ships, so yes, existing customers of financial institutions get access to better products and maybe faster service, but at the same time, it brings in people who were not served previously. In the case of Kabbage, we have twice as many women and minority business owners in our customer population as exist in the general business owning population in the US. And the reason for this is twofold. One of it is selection bias, positive selection. Our customers would rather come to an anonymous website rather than be judged across a table by a lender at a bank. So they're more comfortable doing this in anonymity. The second piece is the data actually speaks for itself. So there isn't a bias against the person sitting across the desk because the data says, oh, this customer is running a really great business, and so therefore we should extend capital to them. And those unbiased decisions, I think, are very important, and that's what's given us the ability to serve these customers, thanks also to access to data from the institutions that serve these small businesses.
Oh, by the way, as you speak about data, what do you think of what just mentioned Carlos?
At Kabbage, we couldn't agree more, and you actually make a very good point that everyone should be sharing. So Kabbage is the beneficiary of access to data in the US and abroad, but nobody's asked us to share data, and we should, and I think, and we would, in fact, if anybody wanted it, but so far I guess we're not important enough yet.
I'm sure they will soon come to you. Are we now at the point, because it's many years we do those conferences here and everywhere, are we now at the point where actors like you are really big enough to be really helping and supporting economy at a real scale compared to banks and so on?
Well, I think you can measure that in a variety of ways. If you look at small businesses, they're really important to all global economies. In the US, half of our non-farm GDP comes from small businesses and 2/3 of all new jobs. For every $1 billion in capital that's deployed to small businesses in the US, 22,000 jobs are created. For every dollar that's deployed, it creates $4 of economic activity. So I think it's really easy to measure in actual dollars and numbers what the impact is of access. And you can do the same thing and say lending to consumers or providing banking to consumers who previously didn't have access to those banking markets. So it may be the function of the central banks to make sure we have a stable system, but technology actually enables inclusion of people who couldn't previously participate in that system.
The main role of incumbents, call them banks, was supposed to fuel the economy and to do those lendings. For you, what is the reason why you had to exist? Meaning, is this a problem of culture, of technologies that led so many players like you, because you are a very big one, but we have others, to exist today? Why the banks just didn't do it at the same time and you will not be there?
I think there are a couple of things. Kabbage couldn't exist the way it does today 10 years ago, or really even 5, because the data that we use today to serve our customers wasn't available. So as these APIs have become available, we've been able to expand the customers that we could also serve. So I think that's probably the most important piece. I think also just the acceptance of other brands in the markets. How many people do you ask today, would you bank with Amazon? Would you bank with Facebook? Would you bank with Google? They say yes. So I think there's a change in the mindset of the constituents that are being served by these institutions.
So sometimes crisis is good for players. More broadly, how can technological innovation help the unbanked, or let's say the badly served, because you have many people who are banked but not really well served, in the industrialized and developing world by bringing them into the formal financial system?
Well, Madame Lagarde gave a great example of that already. I'm on the board of an organization called CARE. It's a global development organization, and one of the core things they do is something called the Global Village Savings Plan, which is very similar. So 3 women get 3 keys in a little community, and that opens up a little box, and they can put money in it, and it gives them a lot of independence that they didn't otherwise have, and allowed them to participate in that community in a way they could never previously as a leader and as a business owner, rather than as someone who didn't have rights. And so I think this kind of technology that Kabbage has can make that easier for organizations like CARE to be able to deliver those types of interesting services that make an important difference globally to those women in those communities. And that's just one example.
Thank you very much. We move on to the second part, and I'm sure you will react a bit later, some of you, on what we just heard. Opportunities and challenge for the payment on other sectors. So, Stefan, should central banks be worried that fiat currencies will be displaced by private cryptocurrencies?
I would say probably not, because it's highly likely that there will be an enormous oversupply of privately engineered money sooner or later in one way or the other. If history gives us any direction at all, that's likely to happen, and that holds all the more so if you actually want to be honest when it comes to what kind of transactions you make, and that's when you get into the whole business of money laundering and combating the financing of terrorism. This differs quite a lot, though, from country to country, and let me explain. In our corner of the world, where we have functioning systems, where we have functioning legal frameworks, where we have functioning standards when it comes to dealing with money, it's quite unlikely that whatever you call them, we call them in the central banking community crypto assets, because they're not currencies, they're not money the way we think about money. But having said that, on the other hand, it's also very, very clear that if you go to Venezuela today, clearly some of the crypto, this, that, and the other, is much, much better than the local stuff. And that's because if you don't behave, then you end up with a problem. And that holds both on the private sector and on the public sector. But on average, though, these so-called crypto assets, they don't have the features that you need when it comes to dealing with money in one form or the other. Having said that, there are elements in these new technologies that also maybe in the future can be and will be used by states and by central banks in one form or the other, and that need not be bad at all.
That leads me to a second question. What lesson can we learn from the Riksbank e-krona project on emerging use cases for digital central banks currencies?
Well, first of all, in my environment, basically people are more or less stopping using cash in one form or the other. Cash is not going to disappear completely because you need it as a backstop. Part of it is very much a generational issue because old people prefer cash. Young people don't know where to put the cash because you can't get the cash into your cell phone. So part of it is a generational issue, but in that environment, and this is where it gets a bit tricky and also important, one needs to be mindful of the fact that we've been around for 350 years. During that full period, the central bank has always been a key player in the financial system, as long as you have your own currency, in my case, the Swedish krona. And in one way or the other, it has been possible for the general public to hold a direct claim on the central bank in the form of cash. Now, you can sort of sit with your arms crossed and say, well, you know, money disappeared, and now what? And you can even be happy about it, because some people in the private sector are very happy about it, because if central bank money disappears, it makes it easier for them. But ultimately, at the end of the day, I have felt that it's our responsibility to think hard about that. Then in that new environment, what are we supposed to do, and how are we supposed to go about doing it? Ultimately, at the end of the day, it's a value judgment. Ultimately, at the end of the day, it's going to be a political issue. It's not an issue for central bankers only, or for the private sector only. So ultimately, at the end of the day, it's something about how you want your society to function when it comes to dealing with money. And let me give you one example, sorry, just one more minute. In the 1800s, we had central bank cash and we had privately issued cash by the banks. This issue, whether the central bank should get the sole right to physically issue notes and coins and not the private sector, was discussed for 20 years in Parliament. Now, when money, physical cash, is disappearing, that same debate comes back. And so we are full circle back to what was discussed in the late 1800s in many, many countries, because new technologies make this happen. And this is going to be a tricky conversation.
What's good with central banks, they always remind you that history is long.
Yeah.
And we have reminded. Thank you. Just to finish with you, Stefan, on that part, can you react to what just Carlos mentioned on data, and why PSD2 is so narrow on payment when banks have data on everything, and not only banks, by the way, she has? Do you have an opinion on this discussion a bit before?
It goes way beyond central banking, but the key issue is to decide, and I think at the end of the day, this is also going, like in Europe, be a legal issue. What is proprietary information and what is not? And who decides where to draw the line? And essentially what you argue is that information has very large elements of public good. Because it's like, using your example, it's like a lighthouse. When you get the data, you don't take the data away from others. And that's essentially how you define a public good. And that's why in the future years, this is going to be a very, very interesting conversation, how to deal with that. And it probably increases efficiency in the system as a whole, but it is not going to be in the interest of those who sit on that proprietary information today.
Right, yeah. If I may just comment a bit, because there is an element in which there's a trade-off when data flows, which is the privacy element associated with the data. So I think it's undisputable that there is economic value and social value in data flowing and not being hoarded by the company that gathers it. And this is not just banks, it's not just fintechs, it's every player in every industry, the telco player, the e-commerce site, the search site, the social site, the social media, all of the data. And really in that trade-off, the way we view it, data is a fundamental human right, the property of that data, the data that belongs to me, the math on my face, who I talk to, the steps I take, where I go, the hotel I stay in, all of that is my property, and therefore it should flow. It should flow if I want, so I have the right for that data to flow, because there's value in it, and it should not flow if I don't want it to flow, and it's my decision. I think that's where it squares off, that you get the social benefit respecting the privacy, and is the individual the best placed to actually set the dial of that trade-off.
Madame Lagarde, before going to our question on crypto, I think you have a few reactions to what we just heard.
Yeah, it's actually a fascinating debate, but it's one that would be entirely different if we had it in the US or if we had it in China. And my hunch is that the biggest debate, confrontation, fragmentation, risks to the stability of the system will actually revolve around that particular point. We've all heard many times that data is the oil of the future, Now, many people think that oil should not be free. We're actually paying for it. And many people think that data should not be free. The question of consent is one that agitates massively in this part of the world, in Europe. The issue of ownership, of price, of base for taxation is agitating in other corners, certainly in the US. And the issue of control or ownership of data is agitating in China. So it's seen from a completely different perspective. And I think where people probably will find consensus is around the fact that it has enormous value. And the value is, of course, leveraged as a basis of how much there is. The more, the better. If you want to have robot financial advising, clearly you need masses of data, you need to do a lot of mining, you do a lot of APIs and AI applied to it. But the question of the value of it will be critical. The question of access to it, the question of consent to access, and the question of, that's what Stephen was saying, what is the role of society? It's going to be addressed in a completely different way, depending on the political system you're in.
Political and culture.
Political culture and political system as well. I think a lot of the reasons why China operates on a virtually cash-free society. I mean, you can start the day without cash, finish the day without cash, and not touch or see a single renminbi banknote, because it's entirely digitalized. But that is not totally distinct from the fact that data is a mean to control and is a mean to removing barriers and is a mean to access, but it's not accessed by me. Okay.
But I think...
Just to underline one point.
Laurent, may I draw just the parallel very quickly?
Yes, you may.
On the, because we happen to have here the architect
you are the one having a plane after.
But the architect of the international rules for the financial system. So after the crisis, we happen to have the Financial Stability Board pushing for a global framework, pushing for global rules, and the Basel III rule set came out of that, which applies generally everywhere. And actually, it has become the standard. So I entirely agree on the cultural differences. I think our global aspirations should be to have the equivalent re-architecturing for the digital age at a global level. We ought to have the same rules across sectors.
But that will be the next battle. You're right.
Yeah, but we ought to have it across sectors, at least in Europe, and we don't.
No.
We don't have the same rule on data sharing across sectors. We ought to have that. That's within Europe. That's within our remit. And then, beyond Europe, it should be a global, maybe a minimum set of rules that apply everywhere. And the problem is we don't have the forum today for those rules to emerge. So maybe with the G20 leadership now of Japan, I heard the Prime Minister in Davos, he was talking precisely about this being one of the items in the agenda. So that's, I think, very, very encouraging.
Can I just add one thing about the central bank digital currency? Because it's one where we at the IMF have tried to weigh in, because I think that, and I hope, Stephen, you will agree with me, CBDC is going to be different depending on which country you're talking about. And I wouldn't go as extreme as Venezuela or Zimbabwe, for instance, which is a different story where it's not even the central bank, it's crypto assets for lack of anything else, because it's vacuum for the rest. But CBDCs can actually, in addition to the political determination that you have referred to, can also be extremely helpful in areas, countries, where the banking system itself is in either disarray or has not yet been built in such a way that it can actually offer the services, give access, and be the monetary transmission channel that it exists in all the advanced economies. So I would caution us and anybody who's thinking about that to have to pass judgment on a very broad basis without drilling down into what is the status of the country. Who is going to guarantee at the end of the day deposits and sort of install confidence in the system? And what is the role of central banking in that respect, using digital currency for practical matters and all purposes.
So you do see in some cases potential for private cryptocurrencies?
I certainly see potential for CBDC. Digital currency is what I'm referring to. I'll tell you what we are seeing, and it changes so fast in a matter of 1 year. You know, the crypto assets at large have lost about 85% of their value in a matter of 1 year. What we are seeing at the moment is what Carlos was referring to, which is, you know, development into new technologies that will actually change the way in which intermediation is conducted, eliminate some of the barriers, including the unconscious biases that exist out there. And you know, I think in the banking system at large in many countries, the difference will not be between those who are disrupted and those who survive, but it will be between those who are cannibalized because they are not seeing it coming and they're not embracing it, and those who self-induce that cannibalization. And I'm using cannibalization on purpose because it's a bit of a striking, horrible word. But it's really what it means. It's you're going to disrupt your business model, you're going to change it, you're going to reduce your cost, you're going to expedite your transactions, and you're going to continue to inspire confidence because you will build that on the basis of an existing backbone, which is your bank and the confidence relationship that you've established with your customers. So that's where I see changes happening now. If you think of Circle and Ripples and all those, that's where they are active and helpful.
You just mentioned a few minutes back that the role of state is also somewhere in that, when you mentioned the difference between China, States, and Europe. I remember on that kind of stage 10 years ago, people telling me that it will be definitely impossible that China go cashless because at every New Year's they give just cash, they love paper. Look, they are yeah. And they are the first one today. You just mentioned state is for something. What do you think in other parts of the world should be the role of the state or central banks in the new monetary landscape?
I think one of the key responsibilities of the state is to provide security. And security applies to financial transactions because it is based on confidence. So you have to believe in the system, and the state is there to making sure that the system is safe and secure for people to trust it. So the role of the state is to identify where there are potential risks, where there could be money laundering, where there could be financing of terrorism, where there could be a breach of consumer protections, and that's where the state has to be extremely active and has to regulate and has to interfere because it's its primary mission.
Thank you. We'll go a bit faster on this question because the debate was very long. So I go directly to the risk and regulatory response to the development of fintech, and I begin by you, Kathryn. You have a lack of time right now. So I will ask the same question to all of you. We discussed a bit about some opportunities. I would like if you can highlight one key risk to the financial sector that you believe the international community needs to be aware of and ready to respond to when we speak about this digital transformation of the finance industry and fintech. Kathryn, I begin by you.
From Kabbage's perspective, I think, I think what's important is that there's appropriate regulation for the activities that the company is performing. So if I'm lending, I don't need to be regulated as a deposit taker or as an insurance provider, or as a money remittance provider. I'm none of those things, I'm just a lender. And what we find is that when the regulation becomes very cumbersome and complicated, it makes it much harder for new players like Kabbage to enter the markets, and it makes it harder, for those customers to be served by the incumbents who are already there, because they're not getting access to the new products and services that they could if they had access to the technology.
But when you speak about regulation on that part, you speak regulated as an actor about what you are or about what you do?
It's more about what we do. And in the US, we don't have this construct. There's not a concept of just being a licensed lender. There's nothing like an NBFC or NBFI license that you can get in the US to do a single thing, even for payment processing. You have to get licenses in all 50 states. It's very complicated. So the OCC in the US has proposed a fintech charter that would allow, again, the appropriate regulation of activities by the providers, whatever they may be doing. So I think it's important that it's the activity that is being monitored and regulated, not the business itself.
Yeah, because many banks on that stage say, yeah, sometimes for new players it's a bit too easy. They are like that. They are regulated just for an activity. I am a bank, so I have to have the same rules for every activity. So you also have the same kind of opinion, in fact.
That's exactly right. And so today we partner with a bank that is regulated for all the things, even though we're only doing one of them, because it's just too challenging, again, to get licenses in all 50 states. Now that is, again, unique to the US because it's wacky the way we manage regulatory issues there, but I could talk about that for a long time.
I'm not sure we are better in Europe, but Carlos, you can react to that point and also the same question about the key risk. Highlight one key risk you can see for the financial ecosystem.
Well, on that point, I agree. I see it, of course, from the other side of the landscape. We certainly have certain activities for which we have a license, which is mostly the deposit taking that requires prudential regulation, and rightly so. Beyond that, though, we engage in many activities that have nothing to do with deposit taking, and yet we're still having difficulty having the same set of rules as the other players that are engaging in that activity, because the prudential regulation of deposit taking extends to everything we do. And that, I think, is a risk for banks in an age of blurring industry lines. Our competition is really coming now, increasingly from the big tech. And as we move into deriving financial insights, actionable financial insights for better decision making from data, as we move into that, for sure it will be the big tech players who will be offering those services, and they don't have the prudential regulation. Now, could we carve out things from our activity that are not subject to prudential regulation? If we don't, I think we're going to be increasingly at the risk of not being able to play on a level playing field. The data comment I said about the data flow is just one example where we don't have a level playing field. So having a level playing field, I think it is paramount, and it's important to reduce the risk, really, to financial stability.
Here it's more, if I may, you just underline a big risk perhaps for incumbents with competition, but also what other kind of risk do you see for the global finance ecosystem or societies with all those new players coming? Because we just mentioned plenty of opportunities,
well, there is lots of risk.
I
think the risk associated with cyber and cyber attacks, which are a day a dozen or 1,000. So we are constantly subject to attacks, many state-sponsored attacks or large criminal organizations, and that will be increasing. And in a world where data is where the value lies, the data breaches will be increasingly an occurrence that is going to be a huge risk. I think those will be the biggest risks that I see.
Thank you. Stefan, the same question.
Well, two things. First one is cybersecurity, because the way we think about assets and money is in a very physical form. Cash, gold. That's how our human brain works. But at the same time, it's increasingly difficult to answer the question, where is my money? Is it in the cloud? Where's the cloud? How do I find it? How do I go and chase it? And that's going to require, over time, very substantial international cooperation, because otherwise you have no idea where my money is. And so that's important. The other part is basically the regulatory framework and how to avoid too much regulatory arbitrage. I think that the answer is quite simple to the latter issue, and that is that if it walks like a bank, if it quacks like a bank, if it behaves like a bank, it's a bank. So those are my two issues.
I have a question for central bank. A few years back, it was easy job. I mean, you have a number of institutions which was clearly identified on the list. At the beginning of the year, your team knew already who they will control, when, even the improvised inspection were planned, and they know who to call when they want to see someone. Today, you have like one new player every 2 minutes, at least if you believe in Twitter, but if you don't, it could be one every day. Do you have enough teams in your bank, central banks, but perhaps everywhere in Europe, to control and follow all the new actors we have in so many different fields? How can we cope with all these new populations?
Well, we can always argue about whether we have enough resources to keep track of all these things. We have made one fundamental decision in my institution, and that is to make sure that it is possible to make small and large value transactions in the Swedish krona in real time, 24/7. to do that, we today allow many more, also smaller players to hook up to our payment system than what we have done in the past, because we have felt that it's a better way to do it that way, because that ensures that clearing and settlement is done in central bank money, and that's a contribution that we can make. If we were not to do this, I feel that the whole thing would highly likely move somewhere else. And let me here give the ECB credit, because most people don't understand that beginning in December last year, the ECB made it possible to make small value euro transactions in real time, let's say from Lisbon to Helsinki. It's not targets, it's tips. It's a different system. And it's not used very much today because most people are not aware of it. But that's a major, major achievement in terms of potentially making it easier to make structural change happen within the payments field in Europe.
So what a change. I asked to a central bank governor about risk, he gave me a new opportunity. Thank you. Madame Lagarde, the same question about risk. What do you see as the one or two key risks for them?
Completely agree with Carlos. I think that cyber risk is one of the major ones, and one against which banks, all the actors of the financial system have to equip themselves. I don't think it will be enough, and that's where it touches on your point about cooperation. There has to be cooperation between the private sector and the public actors and policymakers in order to help with cyber security. Private sector on its own by itself will not be sufficient. That's our view. That's number one. Number two, I would rally your point, which is that eventually regulators, supervisors lose the race against innovation and transformation. Not that they should be against it, but they have to be with it. They have to appreciate that. They have to understand it to make sure that the principles of stability, of security, of safety, of protection of consumers, of information and education in financial literacies are adhered to in spite of those technological changes. And that means money. That means regulators and supervisors being sufficiently financed so that they can keep up with changes and not be lagging behind.
And talents.
Money gives you access to talent. That's exactly right.
Thank you very much. And I would like we finish this panel on the question you just mentioned, which is cooperation. So I would like to ask to each of you, and I will begin by you, Kathryn, and finish by Madame Lagarde, about how do you think to face all those new opportunities, challenge, and risk? All the actors of the ecosystem, being central banks, being top tier one banks or smaller one, being regulators, IMF, and so on, and of course, new players, should work together to face all these issues and opportunities.
We already embrace the idea of collaboration. We partner with large banks today. I think it's important that this interaction happens, just like the one we're having here on stage and the one at this event, because when you don't interact directly with the other, then they remain the other. And it's something about which you may be afraid or uncertain, and it's important to recognize that we don't know things. You guys have forgotten more than I'll ever know about monetary policy, but I think it's important that we have this conversation so that we can all be informed.
Carlos, same question.
Yeah, I think cooperation is essential. Of course, with the innovators out there, I already mentioned the need to accelerate the pace of change internally. So that's why we have tons of interactions with startups. I think with supervisors and regulators likewise, we both benefit, certainly in aspects like the cyber cooperation that Madame Lagarde just mentioned. It is critical, for example, that banks get alerts from authorities on cyber, and that we get feedback from the suspicious activity reporting that we do. And I think we have some room to improve on that feedback so that we can tune our systems better, really trying to find the needle in the haystack as it regards fraud or money laundering, for example. And quite often, our suspicious activity reports are just not so useful, and we don't get the feedback as we should. So that's another example where cooperation. And then my final point would be also a point that was just made by Madame Lagarde regarding the need we all have to embrace innovation also on the supervisory side. Many times we want to do things, we want to change how the organization works to be more agile, for example. We want to change the culture of the bank to be innovative, but that's basically against being conservative, which is what traditionally has served us well. So the status quo has served us well. The incumbents, we have done well in preserving stability, in preserving people's money. And as we change, of course, that raises questions in our supervisors. And those are the right questions, but at the same time, we need to change. So we all need to embrace innovation. I think maybe one example of that would be the adoption of cloud. It has taken a long time for many supervisors to understand that it was a better way.
So a question of pace also of adopting innovation by the regulators and central banks. Sounds like leads me to you, Stefan.
Well, cooperation is both desirable and probably over time a necessity. Because as I started out saying almost an hour ago, money is about social conventions. And then you have to have agreements on what that means so that we're talking about the same thing. And we're really talking about how to combine technology or technological change with a legal framework, because that's what money is all about, and that requires cooperation. And let me give you one example. Within 5 minutes, I can probably get backstage somebody on my computer in New Zealand and talk to this individual in real time. But I just can't get the money to go with the same speed. And that means that something is not right when it comes to that. So we need to get better at using the technology that is available. Thank you.
Thank you very much. So that leads me to you, Madame Lagarde, to the same question and a conclusive word on that panel.
Well, cooperation will be the critical factor to fuel trust. And trust is the lifeblood of the financial system. So it's vitally important across players, across countries, across institutions, and between those who determine and those who play by the rules. But I would like to close with, two areas where I believe that fintechs can actually do unbelievable good, and maybe money in the process, but I'm not focusing on that. I'm thinking about the 2 billion people who are unbanked or totally underbanked. And those 2 billion people around the world can actually have access to transactions, platforms, to money in a relatively safe way and identifiable way thanks to fintechs. And I'm thinking about the millions of people who work in a foreign country and have to send money back home, and that's what we call the remittances, which for some countries is critical, and certainly some families is again, the lifeblood. And for them not to have to pay 7 to 8% additional cost because they're remitting part of their salary back home is actually critically important and can mean, one more meal per day or not for some families. So fintech can do a lot of good, can certainly help people make a lot of money, can certainly transform institutions, but I think it has multiple possibilities that we should all explore. Thank you.
Thank you very much, Madame Lagarde. Thank you very much, all of you. I think you can applaud the panel.